Time now for Ask the Expert. Today marks 30 years since Black Monday, the biggest single-day stock market collapse in U.S. history.
Financial professional Mark Farhnan from Retirement Income Planning joins us to talk about this anniversary and where things stand on Wall Street today. Take us back to that day. I remember it well. It was a 22% drop in the Dow, right?
That's correct, Charles. I remember it also. The Dow dropped to 1737. And it was devastating to most people. I had some neighbors from across the street that had a very large inheritance, and they came across the street to my house and needed a drink because they were so frightened about what had happened.
What sparked it?
A lot of things. Some was just computerized trading was starting to take place. Inflation was raising its head. People were starting to panic. But it wasn't systemic like it was 8 years ago.
Yes.
It was just a few things coming together. The oil crisis had occurred earlier in the previous decade, so that had some bearing on it as well.
Has anything been put in place since then to try to stop history from repeating itself?
Well, after the Great Recession, as I refer to it in 2007, 2008, 9, et cetera, we've done some things to systemically protect ourselves as a society and as an economy, but we have to keep in mind that we can't control the market. And so since the market can't be controlled, we can only control what we do as far as reacting to the market and how much risk we take.
And people have a different tolerance when it comes to risk. But one thing to remember is that you said the market was what, at 1700 or dropped to 1700?
1737.
Here today we were at 23,000. So it's been this tremendous increase over 30 years, which points to the benefit of always being a long-term investor.
That's very true, Charles. The thing about the market is that it's always going to go up and down. So you have to, if I can use the analogy of a roller coaster, you have to be willing to hang on.
Yeah.
If you've ever ridden a roller coaster, the first thing they tell you before it leaves is hang on tight.
Yeah, it's fun going up on it.
That's right. But the market is just that way, so you have to be willing to hold on. If you're not willing to hold on, or you feel that the risk is too much for you to sleep well at night, or you just aren't emotionally equipped for it, you need to reduce your exposure to the market or maybe not be in the market.
All right, all good information. We thank you very much for coming in and sharing that. If you have a question for our experts, email them at asktheexpert@today'stmj4.com. You can leave a voicemail. We do have the number right there for you.